What is up, everybody? Welcome back to Bitcoin and Markets. Happy Wednesday out there. It is CPI day. CPI was released this morning. I did live stream that over on Telegram exclusively. It was a little bit higher than anticipated. The forecast was for 0.26, and it came in at 0.3% month over month. So a little bit higher. And of course, along with that is a lot of dooming about reacceleration of inflation. I don't think we have anything to worry about. We will see what happens throughout the next couple months. Remember, once Trump won, there was a lot of optimism out there, and you can have a pickup in economic activity, which will increase lending and increase prices and stuff like that. So, is this a one month bump or not? And actually, let me take you guys right into the chart here. Let me share my screen on this. This is the Bitcoin price, but I'm going to jump over to the US inflation rate month over month and go to the monthly and go down to different. There we go. So this has not quite updated yet. It did come in at 1.3% up here, right on this line. So we will see if that gets updated. But overall, you can see this trend is still down, even though it doesn't feel like it. The trend is still down, and we could be just a month away from zero month over month and then falling down to 2%. If we go to the US inflation rate year over year, it's coming down. I've spent a lot of time with this chart today, making a few different charts for the Telegram guys. And so post GFC normal is what I was talking about for a long, long time, ever since being on FedWatch and, years and years back towards the beginning of COVID. But post GFC normal was something I guess we could go back to here. This range would be like a post GFC normal. All right. Plus or minus around 2%. And so I said, we're just going to return to a post GFC normal. And we kind of have done that now. So we will see where this takes us. But we are back in a post GFC normal, and I see no real threat of reacceleration of this. But that does tie into the main topic that I want to talk about today, and it's going to be a reaction to Patrick Boyle. This was requested by a supporter of the channel, Boog. So we're going to take a look at this. And within that is inflationary questions, right? And so I'm going to have time to talk about that a little bit more. All right. What else? Bitcoinandmarkets.com. This is the homepage, so check it out where I do all my writing. Yesterday, I released this one answering the critics of the Bitcoin reserve bill and used some examples. These two guys, Chris Hayes and Cenk Uygur, and go through their arguments and talk about like the sources of funding for this. Bitcoin is not a partisan issue. The bill about SAB 121 that went through with multiple Democrats on both sides, both houses voting for it, including the Senate Majority Leader Chuck Schumer. So this is not really a Republican issue. Bitcoin is not. Plus, we have RFK Jr., who is a traditional Democrat, Tulsi Gabbard, traditional Democrat, and they are both Bitcoin proponents. So this is not a partisan issue. Libertarian commitment to sound money. They say it's hypocritical that libertarian Bitcoiners, they want support from the government. But in this case, it's not that. It's sound money. We deep roots in a commitment to sound money, which Bitcoin represents. And so there you go on that one. Bitcoin is not as speculative as you think. Here's the 4-year CGAR, and the lowest is 23% compound annual rate of growth. So it's not nearly as speculative as they claim it is. Bitcoiners want to accumulate, not offload. Part of their argument is, pump the price and then Bitcoiners can dump on the government, basically. But no, Bitcoiners are obviously known for wanting to accumulate more Bitcoin. That's part of the whole mantra from the gold bugs. We want dips so we can buy more, so we can stack more. So it's absurd to claim that Bitcoiners are lobbying the government to offload their holdings. Just completely absurd. Bitcoiners don't need a bailout. The ones that do need bailouts are the scammers, not Bitcoiners. That's why they keep saying crypto. Like if you listen to the Cenk Uygur thing, it's crypto, 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 crypto. I don't think he says Bitcoin once. And it's all just talking about these guys, letting these guys into what the definition of Bitcoin is. The crypto scammers are the ones that need a bailout, not the Bitcoiners. So Bitcoin, especially being at all-time high, a bailout is kind of ridiculous. And Bitcoin is the best defense for a changing monetary landscape. That's the whole idea behind why the government would want to pursue a Bitcoin strategic reserve, is because of this changing monetary landscape that we're going through. And here are the traits of money, and Bitcoin is better, obviously better than fiat, and obviously better than gold as well. So check that piece out. Also did a standalone video for it yesterday. I think I got that one out. Well, maybe I didn't do this one. I did another standalone video, so you guys can check that out. All right, let's see who's watching. 52 people. What's going on? If you're watching on Twitter, please check out the YouTube and Rumble. It's in my pinned tweet. And like, comment, subscribe. Appreciate that. If you're watching on those other platforms, make comments throughout this. I like the interaction. So, all right, let's go to Patrick Boyle now, or actually Bitcoin price first. Bitcoin price, then Patrick Boyle. So back to the chart, and we'll go to Bitcoin. And we'll go to candles and down to, let's go to the hourly. Up over 100,000, looking like it's trying to push a little bit higher even today. I don't know if we will get a breakout today. It is Wednesday. Maybe we'll get a breakout into the weekend, Tuesday, Thursday, Friday, have some big time movement on the price. Eventually, I'm planning for this to break up. If you go back to this pattern that I've been talking about for several weeks now, this is just a pattern that I initially used. Had a little bit back and forth on Telegram about this. So I initially used this pattern just to demonstrate the type of consolidation I expected, and that was a rising consolidation, because all the dips would be bought by MSTR, by Marathon, by Riot, by the ETFs, by market makers for the ETFs, by market makers for options on the ETFs, and governments, the kind of stealth government accumulation perhaps that we're seeing already. So that is why everyone's going to be buying the dips at this point, and why the accumulation would be in an upward pattern like this. And that's exactly what we've gotten. Matched this pattern very, very well. I did think it would break up sooner than this. I thought maybe this would be the breakout, but maybe this is the breakout. The top is way higher, even higher than this. I think there's a lot of imbalance between supply and demand right now. And when that breaks open, we could see a 50% move in price over, a week or two time frame. Okay, so that's that. That's the Bitcoin price. Should we look at some other macro stuff real quick before we get into Boyle? This will put some stuff in context here. I'll go to the daily on this. Now, the dollar is behaving pretty much, I would say, as expected, but, there's not anything surprising here. Breaking out of this descending wedge that I drew the other day. We'll see if it follows this path. As the global economy is slowing down, China is having major, major issues. The dollar is going to continue to get stronger. Okay, gold having a good day, trying to get back above this high from November 22nd. We'll see if it can do that. But still bullish gold, but much less bullish than Bitcoin. Okay, how about the US 10-year? Coming back a little bit here. We'll see. The Fed, the chances of a Fed rate cut are near 100% next week. So we'll see how this affects yields going over the next few days. Oil also up quite a bit on the day, but in the grand scheme of things, it's still very, very weak. It was held up by this trend line we talked about. And finally, stocks having a good day, not back at all-time highs yet, fell out of this pattern and trying to get back into it. This might be considered like a retest of the bottom here, and we could go a little bit lower. But again, not concerned really about any sort of major reversal in the stock market right now, but it is coming. It is definitely coming. As we approach recession, stocks will start to trend downward. Okay, so that's all. Just go back to Bitcoin. And now we can go to Patrick Boyle. Share this tab. I really do appreciate his content. So guys, if you don't know about him, you should check it out. Check out his channel. If I can select this over here. There we go. All right. Crank her up. Crank up the volume here. And we did have a comment. Raphael, excellent. I watched the Patrick Boyle video. Thanks for analyzing it. Yes, sir. It was requested. Okay, let me maximize the screen here for Telegram and press play.
A tariff man, saying that tariffs are the greatest thing ever invented and that the word tariff is the most beautiful word in the dictionary. He announced last week that he would impose new tariffs on goods entering the US from Canada, Mexico, and China on his first day in office. To be clear up front, this is not a political video. It shouldn't matter if you love or hate Donald Trump. The purpose is just to discuss the issues that exist in international trade and the impact that tariffs or other government actions might have on trade, employment, and inflation.
Okay, so I was talking a little bit on the pregame show with Telegram, and there he said, hey, this is not political. We're just going to talk about what's happening and what impacts it could have. But he really doesn't do that. He sticks to the textbook. And even though I love this video, is very comprehensive, and I think he hit most of the main points, I didn't really hear a lot of conclusions and just a lot of textbook, what this could mean, what that could mean. And that doesn't really provide a lot of insight going forward. I'm going to try to, and you guys could tell me how wrong I am or how right I am.
We'll look at how they've worked and failed in the past and how American tariffs today might be different to the disastrous Smoot-Hawley tariffs of 1930. Trump announced last week on his version of Twitter, everyone has their own version of Twitter now, that he would sign an executive order for a 25% tariff on all goods coming from Canada and Mexico, and that these tariffs would stay in place until the flow of drugs and immigrants from these countries into the United States has come to a halt. After the announcement, the Mexican peso fell 2% and the Canadian dollar traded at its lowest rate to the US dollar in 15 years. Trump has all.
One thing I think is important to point out is the Canada-Mexico tariffs are not protectionist in the way that the tariffs would be against China. Okay, so they're the same weapon but used for multiple different purposes. All Mexico has to do is stop the flow of the migrants. That's it, and then the tariffs will go off. So a little bit different way of analyzing that. It's definitely a club, if you will, against China or against Mexico and Canada, but it's more of a protective economic scheme when it comes to China. So that's important to break out.
Already vowed to target China with a 60% tariff and has discussed a 200% tariff on some car imports. He says that goods coming from China will be hit with an additional 10% tariff if China doesn't do something to halt fentanyl smuggling. Tariffs, which are controversial with economists, are core to Trump's economic vision. He sees them as a way of protecting American jobs, growing the U.S. economy, and raising tax revenue.
Not completely. Remember, the Mexico-China or the Mexico-Canada thing is Canada's kind of like China. No, those aren't for the economic purposes. Those are for political purposes.
On the campaign trail, he told voters that his tariffs would not cost Americans anything, that they're instead a tax on another country, which many economists described as being misleading. US trade with China has grown enormously over the last 25 years, and while it brought lower prices to US consumers and higher profits to American multinationals, it came with some downsides too. And both sides of the political aisle have been focused on how to better balance trade and how to avoid losing access to strategically important goods and industries. While Donald Trump is a divisive politician where some people love him and others hate him, his threats to impose tariffs on foreign imports are drawing support from lawmakers of both parties. Janan Ganesh wrote in the FT a few weeks ago that Trump's biggest success during his first term in office was that he bound the actions of his successors, saying that Trump moved the consensus on a big issue, foreign trade, such that the next president either couldn't go back or didn't want to. During Trump's first term in office, the average U.S. tariff on
point there. This is something that Peter Zion said a long while ago, is that there was no difference between Trump and Biden on many, many issues, and trade and tariffs being one of them. I think Biden actually increased tariffs on many things over and above what Trump had done. So, yeah, that is an interesting point. It also kind of speaks to the overriding trajectory of the global economy. And part of this that I think Patrick doesn't consider is the overall trend that we are in, a deglobalization trend. So it's not just Trumpism, it is populism, the wave that is going through the world, deglobalization. And so that is the underlying current that is being manifested in these tariffs.
Chinese imports rose from around 3% to nearly 20%. When Joe Biden took office 4 years later, instead of reversing Trump's trade policies, he added more tariffs, in particular on electric vehicles, and a protectionist industrial policy that included subsidies and a Buy American mandate. The Cato Institute, a libertarian think tank, described Bidenomics as Trumpism with a human face, or polite Trumpism. So let's try to understand the issues with international trade that have been pushing the United States and other countries in this protectionist direction, and if tariffs can be expected to improve the situation or make things worse. We'll discuss whether Trump could impose his tariffs unilaterally on his first day in office, and whether the mere...
Okay, that part about will they work or will they make things worse? It depends on the goal, okay? And in a era of deglobalization and general stagnation, the goal is not necessarily, like I've said plenty of times here on the show in recent podcasts, is that the world is moving more towards a zero-sum game, zero-sum thinking. And so what is the goal here? What are these tariffs supposed to do? Not what they are like claimed, the rationalization behind them, but what are they doing? They are showing that the world is more zero sum. And so that's the thinking that is going to be underlying this move. Success would be winning in a zero sum game. Winning in a zero sum game is just you beating your rival. Okay. So the US benefiting relative to China. That's the goal. And that's what I think needs to be talked about more. And Patrick doesn't even, he mentions that this tariff war will hurt China more towards the very, very end, but he doesn't tie that into being the overall goal because of this underlying current.
Threat of tariffs could be used to improve America's bargaining power. Before we go any further, let me tell you about this week's video sponsor, Novium, who create innovative high-end products that inspire curiosity and develop creativity. They make amazing Christmas gifts for all hover pens. Novium ship worldwide, so be sure to order yours today. So tariffs are, quite simply, a tax on imported goods, which gets applied at the border when a good is bought from abroad. This is a protectionist trade strategy where the tariffs push up the price of foreign-sourced goods, incentivizing consumers to switch to domestically manufactured goods, giving domestic manufacturers room to increase their own prices. The benefits that domestic manufacturers receive come at the expense of consumers, who all else equal pay more for the goods that they buy.
Okay. That one phrase, all else equal, is doing a lot of work. It's doing a lot of work. Let's rewind this a little bit. We'll listen to that section again and just notice how much work all else equal is doing. Of course, you have to say that because it is the textbook. The textbook is what he's talking about here, the textbook definitions.
Simply a tax on imported goods, which gets applied at the border when a good is bought from abroad. This is a protectionist trade strategy where the tariffs push up the price of foreign-sourced goods, incentivizing consumers to switch to domestically manufactured goods, giving domestic manufacturers room to increase their own prices. The benefits that domestic manufacturers receive come at the expense of consumers, who all else equal pay more for the goods that they buy. For this reason, tariffs are redistributive, taking income from the household sector and transferring it to protected businesses. Now, there's nothing too surprising about that idea, as all taxes are redistributive. But critics of Trump's plans say that they're not just redistributive, but that they'll be inflationary and harm the US economy. His defenders, on the other hand, point out that this didn't happen during Trump's first term and that the Biden administration looked into removing Trump's tariffs when inflation was high, but their analysis showed that the change was unlikely to make a big difference.
Okay, so he introduces some terms here: inflation, inflationary, and on the converse side, deflation and deflationary. So inflationary, usually people are talking about prices, okay, and that prices will go up, which is inflationary, causing, I guess, being like real inflation of the money supply. And but prices going up can actually be deflationary because it can cause customers to be cash strapped and pull back, and then businesses will close and people will default and there will be a collapse in credit. So there will be a deflationary collapse in credit. And so the rising prices that people call inflationary can result in deflation. So it's very see the problem I have with these definitions and the use of the term inflationary and inflation to talk about prices, because it just doesn't work. And it comes up, it's a very important piece right here in this next section that he talks about. He mentions that producer prices went up, but not consumer prices. So the middleman took a lot of the burden. Well, why is that? Why? That's the question you need to ask, and the answer will help you understand what's really going on in the undercurrent of this whole situation.
Because a tariff is charged at the border, it does push up the price of imports, which is inflationary. Some of that impact is offset by changes in exchange rates, where the currency of the tariff charging country rises against the currency of the country being subjected to tariffs. Additionally, foreign companies sometimes reduce their prices in order to remain competitive. An analysis by LPL Financial found that tariffs imposed in 2018 hit producer prices more than consumer prices in the United States, as wholesalers absorbed some of the price increase. Now, long-term viewers are probably...
Now, why is that? Because we couldn't afford it. We couldn't afford it. So, and if you can't afford it, see, inflation can only continue higher, or prices can only continue higher, and CPI can only continue to increase if wages are rising and income's rising and you can afford it. But if you get to a point where you literally can't afford it anymore, you have to start cutting back. That's when the inevitable transitory comes in and they come back down the other way. That is what we're in today. So the reason why the producer prices had to absorb, or producers, the middlemen, the intermediate goods had to absorb it, is because the end consumers were so cash strapped. And then knowing that, you can say, well, okay, the follow on from that is that they're going to pull back, and then there's going to be a downward slide. So you have to dig in a little bit deeper.
Aware that I believe in free markets and limited government intervention in trade. From a free market perspective, the correct response to foreign governments subsidizing exports is to do nothing. In fact, an argument can be made that a country should welcome other nations' export subsidies, which Milton Friedman has described as a form of foreign philanthropy, saying that if another government wants American citizens to enjoy its goods and services at artificially low prices, Washington should tell them to bring it on. The problem is that persistent subsidized imports can eventually displace domestic production of often strategically important goods. The worry is that unfair foreign competition can bankrupt domestic producers, after which prices can be hiked up by a foreign-owned monopoly. The example often given of strategically important production is steel, which I discussed in a recent video about how Britain was planning on paying huge subsidies to foreign-owned steel mills to keep them open in the UK. Some of the top comments said that if China is willing to ship steel to Britain for less than it costs to produce, the £1 billion subsidy should instead be spent on buying finished steel and setting it aside as a strategic reserve. Trump is arguing that tariffs on America's trading partners are necessary to protect US businesses and the American worker at a time when US manufacturing jobs have dropped from their peak in the late 1970s. Trump supporters point out that some of his tariffs did appear to work when he was last in office, giving the example that tariffs on imported washing machines may have created new jobs as they were imposed at the same time as Whirlpool was building a new factory in the United States, and the tariff helped.
See, this is why it's very hard to analyze what exactly will happen with tariffs, because it's so dependent on very particular market conditions. Also, the textbook will say that, it's to shift demand from foreign goods to domestically produced goods, but it can also just pierce demand in general. So, like, I don't know about you guys, but when you go, a lot of the ads that you might see on YouTube, or ads that you even see on Twitter, or you go onto Amazon, and the ones that they're putting at the top of your home screen, a lot of them are just these really cheap plastic things from China. And that is, I mean, I guess they don't have to be exactly from China, but if you didn't buy that, you're not going to buy another cheap piece of plastic made in America. If you buy less plastic doohickeys and widgets and stupid toys that you might play with once, or your kids might play with once, and then you never touch it again, but you wasted $40 on it, then you're not buying those things. You're not going to buy American made one for $50. You're just not going to buy it. Okay. And so it's not just like a horizontal transfer from foreign producers to domestic producers. There's also a qualitative shift, especially right now when we're in this undercurrent of deglobalization, stagnation in the world. It's harder and harder for people to get by. There's overall just grinding lower. Look at the industrial production of Germany, okay, as an example. We're just grinding lower. People's living standards are going down, and now you're going to do a trade war. So it's very hard to piece together what a tariff is going to do there. But I can tell you one thing is almost certain, that it's not going to be a horizontal transfer from foreign producers to domestic producers of the same thing. Okay, there's going to be a qualitative shift in what is bought, and perhaps what services are bought, the amount of savings that people have, put towards savings and things. So there's a lot of questions and nuance to overall effects of tariffs, especially right now.
The new factory to succeed. The results of trade policies like this are unfortunately not always clear, as there are a lot of moving parts, and it can be a bit like dietary science, where a person excludes sugary drinks but then eat more food, offsetting most of it. The Federal Reserve analysis of Trump's first-term tariffs found that a lot of the benefits were offset by the higher costs of imported raw materials that American manufacturers had to buy, as well as from retaliatory tariffs from other nations. Overall, they found that there was a small decline in the number of US manufacturing jobs during Trump's first term, but a number of factors like the start of the pandemic could explain that outcome. Now, it's become a bit of a cliche when talking about Donald Trump to say that you should take him seriously, but not literally. And while that might be a cliche, it's still probably true. So while the specifics of what he will do about trade once in office are not clear, the thing that is really clear is that foreign trade is the topic he cares the most about. You can find videos online dating back 40 years of Trump on daytime talk shows being mostly pleasant until the topic of foreign trade comes up. Back then, Japan was his main target, while today it's China. Janan Ganesh wrote a few weeks ago that trade is almost all that Trump cares about, with immigration coming in as a distant second. He says that over the last 40 years, Trump has had an intense belief that to run a current account deficit with another nation is to lose to it. I think that the exact mechanics of how Trump plans to deal with trade are not clear, but I think it makes sense to take him at his word that this is the issue he cares the most about. Exactly how he'll put tariffs in place is maybe the most unclear part of his plan, but I think it's unlikely that he'll do it on Inauguration Day, as he has said, as that would likely require him to declare a national state of emergency, which is what Richard Nixon had to do to impose 10% tariffs on all imported goods when he suspended the convertibility of the dollar into gold in 1971.
This is interesting because, that's traditionally a Democrat type of position. So Democrats were unions, Democrats were the working man, right? And Trump is basically a 1980s Democrat, but now that is what has taken over the Republican Party, mixed in with a little bit of other things like the border and free speech and things like that. But overall, it's a very democratic thing. But how have things shifted over the years? So again, when they're attacking now today, we see in some of the headlines, they continue to attack the Bitcoin Strategic Reserve as a Republican thing, a very partisan thing. It's not that. It is basically it fits in very well with the traditional Democrat Party. And anyway, so let's just continue.
Nixon put those tariffs in place to prevent American producers from being disadvantaged in the expected exchange rate volatility around that announcement. Now, if tariffs were applied to Canada and Mexico and applied to things like oil and gas, it would be quite inflationary, which is the opposite of what Trump promised on the campaign trail. So I don't think that this is awfully likely. The USMCA trade agreement, which replaced NAFTA in 2020, is up for a scheduled review in 2026, and it seems extremely likely that Trump will use that deal as a bargaining chip to negotiate with Canada and Mexico over things he cares about, like immigration.
Okay, well, at least he did say things he cares about, like immigration, because again, this stuff with Canada and Mexico is not about the economics of it. It is about the immigration issue. So it's just being used as a cudgel. So I wouldn't they almost have to be analyzed in two different groups, the China stuff and Canada, Mexico.
This is exactly what he did in the past. In 2019, under the threat of tariffs, Mexico agreed to step up immigration enforcement to prevent migrants from entering Mexico from Guatemala in the south and to stop them from leaving to the US in the north. While it's reasonable to expect Trump to try and extract concessions during these negotiations, both Mexico and Canada do run persistent trade deficits, much like the United States, and so overall they are on the same side as the United States on this issue. It's worth remembering that during his first term in office, Trump's cabinet mostly moderated his protectionist instincts, along with the stock market reaction, which he saw as a measure of voter approval. It looks like he might have a less conservative cabinet this time around, but likely still cares about the stock market. So what are the problems in international trade that Trump is aiming to fix? Well, the hyperglobalization that began in the late 1990s made the world better for most people. It almost eliminated extreme poverty and reduced global inequality. Consumers in wealthy countries benefited from cheap imported goods, which kept inflation low, and standards of living, as measured by per capita income, increased around the world. While the average person was doing much better than before, blue-collar workers in developed countries were struggling as manufacturing work moved abroad where labour was cheap. While global inequality had fallen, inequality within the United States had grown.
Okay, I don't like how he makes it seem like globalization was a choice. So globalization created all these benefits. Okay, that's great, but globalization is actually it's a symptom. It's not a cause. It is a symptom, and everything is caused by a deeper thing, and that is basically the end of the Soviet Union and the unipolar moment when everybody was under the WTO. They were under, they had the UN, still had some clout. You had the World Bank, you had IMF, you had all these international organizations, and it was a unipolar world of trust and cooperation. And, that this was relatively recently after Ronald Reagan and Margaret Thatcher. And so you had this trust and this exuberance in the global economy, all under the Pax Americana. And now we don't have that. So that is why globalization is going away. It's not a choice that globalization is going away. It's going away because that unipolar moment is going away. Okay.
On top of all of this, Western governments were getting concerned that China and some other surplus economies were engaging in unfair competition by subsidizing manufacturing while imposing restrictions on foreign companies in exchange for access to their markets. This became more of an issue as China developed and could no longer claim to be a poor developing country. Western economies began to see it as a problem that China had the highest manufacturing share of GDP and the lowest consumption share of GDP in the world. By agreeing to absorb China's excess production, deficit economies like the United States were allowing their most aggressive trade partner to set their trade policies for them. The economist Michael Pettis argues that surplus countries subsidize their manufacturing industries and pass on the costs of these subsidies to deficit countries, like the United States. He argues that a free trade country with open capital markets, when trading with a planned economy, is not really engaging in free trade. They're instead
I really like Michael Pettis. I'd like him more and more.
Accepting the inverse of their trade partners' trade and industrial policies. So how does China subsidize exports? Well, Chinese exports receive considerable direct subsidies, but the indirect transfers they receive are even larger. Chinese power plants and banks are mostly government-owned, meaning that policymakers can decide to give cheap energy and low interest rate loans to favoured businesses. There are a variety of other ways a government can support its manufacturing sector too, most of which involve transfers from the household sector to the business sector. Trade surplus countries often have undervalued currencies. This helps exporters at the expense of importers. Manufacturing businesses are usually exporters and households are net importers. Keeping interest rates artificially low helps borrowers at the expense of savers. And once again, businesses are net borrowers and households are net savers. Overspending on transportation infrastructure, like railways, roads, and ports, supports businesses at the expense of households too. Repressive labour laws, restrictions on worker mobility, and low penalties for pollution additionally help the manufacturing sector at the expense of the household sector. In China, industrial zoned land is an order of magnitude cheaper than residential land, another transfer from households to businesses. When all of these policies are combined, there are huge transfers from households to businesses in China, meaning that while businesses can prosper, households can't afford to consume the goods that are being manufactured. Now, in a closed economy, this would mean that businesses would be forced to either raise wages to increase consumption or reduce production due to a lack of demand. In a globalized trading system, the surplus production can be exported.
Okay. Very, very good explanation there. The one thing I'll add is also not only are there actual policies in place, but there is a structure in place with the provinces and the 5-year plans and goals for growth and goals for production quotas and all of this stuff that reinforces a manufacturing mindset, a overproduction mindset. And so not only are, what he said, but on top of that, it's a cultural thing. It's the way the government and the Chinese economy is set up to emphasize overproduction. That's why I say the end of their economic model is here. Because if globalization is going away, and he just went through that, there is no domestic demand to suck up all of this manufacturing, it has to be exported. But it's not going to be exported because of globalization, deglobalization, and tariffs, and all of these things. And so this is the end of the Chinese economic model. They have to fundamentally shift what they're doing, and I don't know if they can. Especially when you talk about the mandate of heaven, you talk about the promise that the Chinese made, saying, you won't have free speech, but we'll make sure we grow at 10% a year. Okay, I really meant 7% a year. We mean 4% a year. How long does that have to go until they're at zero or negative, and the mandate of heaven is being revoked by the people? So this is kind of an existential threat to them, on top of it being the end of their economic model. And the reason for that is the undercurrent of what's happening in the world.
This trade surplus doesn't necessarily give China an advantage. It's a result of flawed policies and the means of dealing with a huge disadvantage, which is extremely low domestic demand. This doesn't just affect China, however, as a surge in a country's exports that are not balanced by a surge in imports means that manufacturers in deficit countries find themselves partially funding the Chinese subsidies with their lost income. The imbalances in China move the production of goods away from where they might be most efficiently manufactured under the law of comparative advantage and cause all sorts of trade distortions. When exports are high and imports are low, a country starts accumulating the currency of its biggest trade partners as savings. Chinese savings are not high due to any culture of frugality in China. It's simply a function of keeping wages low and exporting without importing. You don't just keep the proceeds of trade in dollar bills in a vault either. You usually invest them in things like bonds. So China's excess savings are mostly sent back to the United States, where there are deep capital markets. This means that there's more capital in the United States than is needed for investment purposes, which can be seen in the huge cash balances that US companies are sitting on. So can Trump's tariffs offset Chinese subsidies and help to rebalance global trade? Well, possibly, but not if Trump just puts tariffs on Chinese imports. The reason this wouldn't work is that if the United States refused to buy Chinese goods but continued to buy from other countries, this would just push the problem to another trade partner. Unable to sell EVs in the United States, China would ship them to Europe, undercutting European EVs.
That's not exactly correct either. The Chinese or the American consumer is the strongest in the world. Will buy everything. I don't know. I've had some European friends in the past, and when they see the things that Americans buy, like the little widgets for the kitchen or whatever, they say only in America. Only that would only be bought in America. And so, no, the American consumer is it is almost irreplaceable. Some part of it, yes, can be replaced by European consumers, but that they're having a worse time of it economically than we are. And so as we go through stagnation and decline, the American consumer is going to become more and more and more irreplaceable. They don't have an option here. So I would differ with Patrick on that point.
European manufacturers, unable to compete in their own markets, would ship European EVs to the United States, and the overall problem would be exactly the same. If China continued to keep consumption low while exporting, Chinese savings would continue to be exported to the United States too. The Chinese trade surplus would remain as big as before, even if it fell against the United States, and the US trade deficit would continue to grow too. So tariffs applied on a country-by-country basis are unlikely to have any notable effect. They would really need to be applied equally to all trade partners in order to work. But this would be very politically contentious, as it would involve upsetting America's allies, who are not really to blame for the imbalances in global trade. If China is already an aggressive trade partner and the US joined them, every other country would be forced to follow suit, as otherwise they would be paying the cost. This is the biggest problem with government trade intervention. A number of journalists have expressed concern that Trump's trade plans are worryingly similar to the Smoot-Hawley Act passed under Herbert Hoover, which contributed to the problems of the Great Depression. I made a video a few weeks ago about the Great Depression, and a notable difference between the late 1920s and today is that in the 20s, America was the world's biggest exporter and had much more to lose than it does today. In a trade war, countries who need to export are in a much weaker position than countries that are absorbing excess supply. While the Smoot-Hawley Act was a terrible...
What a great point. What a great point. And that makes me think also about the phrase that demand begets supply. So remember, if you are an importing country, you are the home of the consumer. The consumer is always right. And if you have all this demand that can't be met internationally, because maybe there's tariffs or maybe there's a pandemic or something, you still have that demand, and that will beget supply. All right. Where the Chinese model is actually the reverse. Okay. Well, actually, U.S. consumer demand created supply from China, but it can also create supply domestically. But China is in the opposite boat. Okay. You can't just make things and then people magically want to buy them. So that's why China is in a much worse situation. Now, remember, going back to the very beginning, I was talking about zero sum and how in a world of deglobalization, stagnation, decline, collapsing fertility rates and all that, we're going to more and more of a zero sum society. Zero sum from a subconscious mental construct of what we are in. And so in that case, we should expect tariffs. And in that case, we should expect these tariffs to happen, and that China will lose out more than the U.S. loses out because it's zero-sum thinking. I'm not saying that's good. I'm saying that's where it's going because of this zero-sum thinking. If China loses, America wins. Just like Trump said, he thinks about it in if you have a current account imbalance, you lost against the other country. So, yeah, that's my thoughts on that.
Terrible idea. I don't believe that it was to blame for the Great Depression, and I don't believe that new tariffs would lead to that scale of economic catastrophe. Trump has said in interviews that he would love to entirely replace income taxes with import tariffs. I think this is...
Okay, another thing that he just said there, that Smoot-Hawley, he thinks it didn't lead exactly to the Great Depression. It could have exacerbated issues, but that he doesn't think tariffs today will lead to the same thing. Now, what would your thinking be if you thought that the tariffs were a symptom of the Great Depression or the international zeitgeist leading into the Great Depression? So if you think that the tariffs are a conscious thing, and yes, they are in a way that you pick what percentage rate you want to tariff at and what country you're going to apply it to and who's going to do the deal and all this stuff. But the ethos of the, I don't know what to call it, the whole aura of the times is making tariffs inevitable. And Smoot-Hawley and the Depression show that they are both symptoms of an underlying problem. And today we have this underlying problem. And so tariffs are showing their head. Depression is probably going to show its head as well because they're both symptoms.
Is mostly bluster and shouldn't be taken too seriously. The Peterson Institute, a mostly centrist think tank, wrote a report on this recently, pointing out that last year the United States imported $3.1 trillion worth of goods, but raised around $2 trillion in income taxes. Tariff rates would thus have to be over 65% to replace the income tax, and that's assuming no fall in imports, which would be extremely unlikely with 65% tariffs. Replacing income taxes with tariffs just couldn't work. A number of big US companies have been stockpiling goods in preparation for Trump's tariffs. The Economist reports that Microsoft, Dell, and Hewlett Packard are among the American tech companies that are rushing to import as many electronic components as possible before the new administration takes office in January. While this might help them in the short term, I doubt that they could import enough components to get them through years of potential tariffs. It's difficult to predict how Trump's trade policies will work. The US could act unilaterally, as they do run the largest trade deficit in the world, and there's plenty of supply in the world, and the thing that is scarce is demand, which is what the US brings to the table. A better option might...
There you go. That's a good way to put it. That there is an oversupply and there's, how did he say it now? There is a shortage of demand for these goods. And the US is the consumer of last resort, if you will. So, yeah, that's a great way to put it.
Be for the United States to work with other large deficit economies like Canada, Australia, and the UK, where combined they make up about 70% of global deficits. If they struck a deal where they, as a group, place tariffs on countries that run large persistent surpluses, that could help to rebalance global trade. If countries wanted to sell to that bloc, they would either have to take steps to boost domestic demand or cut production. Other countries wouldn't have to really agree, as most of the rest of the world are trying to export rather than agreeing to import. If they wanted to sell to these countries, they'd just have to agree to the terms. A rebalancing of trade like this would be extremely painful for surplus countries like China, Germany, Japan, Russia, and Saudi Arabia, but it could be expected to boost American manufacturing and allow American businesses to compete internationally without slashing wages. This rebalancing would also mean repatriating the capital, which has been flowing into the United States for decades. Foreigners own around 20% of all US securities outstanding, and as trade rebalanced, these savings would have to be repatriated back home, which would have to occur in an orderly manner. It's very difficult to predict what Trump might do in his second term in office, other than to say that he'll amp up trade negotiations while likely keeping an eye on the stock market as a measure of his success. As always, I'll be interested to hear what you have to say in the comments section. If you found...
All right, that does it for that. So let's check out the comments here. Dex Invictus back with us. Heard something about the Bank of England bailing out shadow banks. What's all that? I haven't heard that. England is in some deep trouble, though, I think. It's kind of a... I was just listening to another podcast. I can't remember which one it was. And they were going through just how bad England is getting. It's similar to Canada, right? They're going down the same path. Raphael, what do you think of Bitcoin's monetization going forward, not being from people selling other assets to buy it, but from loans using the credit money system we have and get to 20 trillion market cap? Yeah, that's one thing that's very interesting about what Michael Saylor is doing. He's creating an opportunity to print money, literally print money through the credit system and directly into Bitcoin. It's fascinating. And in that case, it would be something like asset price inflation. So asset price inflation, where the cost of, or the prices of stocks and homes and bonds and stuff, they're going up because that's where all the leverage happens. That's where all the lending is centered around, because the broader economy is stagnant. And so it's kind of like you're narrowing the stream of where that new credit is being created. If that stream gets diverted a little bit into Bitcoin, or Bitcoin gets included into that asset price inflation basket, it would be very interesting to see if it steals some money away from those two things. Of course, we've talked about it for a long time in Bitcoin about Bitcoin stealing a lot of real estate's thunder. I saw another tweet that I responded to today about Bitcoin versus, buying and holding a house, a rental for 8 years. Um, of course, when you look at Bitcoin in the last 8 years, it doesn't make any sense. But going forward, even if you talk about holding Bitcoin, and in the worst case scenario, it goes up like 10% a year or something, there's no sense in even buying a house. And so all of those people that have homes for Airbnbs or whatever, I can see it really taking a lot away from that. And so maybe the fire hose would be directed away from real estate, at least this kind of residential niche of real estate, which I don't know how big that is, say several trillion, could be funneled into Bitcoin. That would be insane. And yeah, we would get to a $20 trillion market cap, uh, within several years, probably within a cycle or something like that. Okay, that was that. Let's go to not seeing any other. Nice. Oh, DT, you did say that in the bill, the Bitcoin Reserve bill, because I was saying if we start buying in the second half of next year, 200,000 a year, um, and I said that I think it says calendar year, whatever, but you said it can't be more than 200,000. It doesn't say not less than 200,000. So I stand corrected on that. I'll have to go back and double check on that. So yeah. Any other comments here before we bounce out for the day? So if you guys have something you want me to react to, you can DM me on Twitter. You can just tweet at me on Twitter. You can put it in Telegram. Spend most of my time in Telegram. So guys watching on Twitter, what's up? 172 people. Jump over to the YouTube or Rumble, like, comment, subscribe. Those you can find the links in my pinned tweet. Trying to get to 1,000 subs on the YouTube to get it monetized. Also, check out bitcoinandmarkets.com. I'll go there one more time here. Been writing there quite a bit lately, doing the free blogs. You also have paid stuff here. So you can go to pro members, and you can see my last one came out on December 1st. I got to get another one out here soon, but I did a macro rundown and Bitcoin approaching 100K. But these are all just for the premium subscribers. And also, if you join for $5 a month, which helps me create the show and keep going after all these years, we have a price forecast competition if you are just a $5 member. And the closest person to picking the monthly close wins $20 in sats. So you guys can check that out if you become members. All right. One last look at the price before we go. Let's go down to the 1 hour. And I have my pattern on here. So still sitting above 100K. I don't think we have seen the last of the five digits, but every time we break back above 100K, we just eat all of those orders that like to cluster around that round number. And eventually there will be no more Bitcoin to buy at this level, and it will need to go higher. So exciting times, exciting times. All right, guys, thanks for hanging out. I will check you on the next one. Bye.